I always was really drawn to the title of your book. And I want to jump right in there. Your philosophy is called the lifestyle investor. And I hear you use the terminology cash flow investing, cash flow investing. And I think a lot of people call it rental property investing, just investing in general. And it kind of gets broad, but you always say cash flow investing, cash flow investing. And if you jump into the pages of the book, your commandments were so interesting and prompted the definition of what is cash flow investing as its own brand, as its own thing. And I love commandment 4 and 5, which is you're not going to invest unless it's going to cash flow almost immediately. Because how do we live? We need inflow of cash. You talked about the stock market. You put your money into equity, and what do you have? You don't pay the electricity bill with your stocks, generally speaking. And so I loved that commandment. And I also loved the aspect of your cash flow investing where you get your initial investment back as soon as you can. And I just wanted to let you touch on that, defining cash flow investing for our audience a little better, because I don't want people just to think these are two words put together. You've really branded it in your book.
Well, thanks for the kind words, Kyle. In my head, I never really wanted to I guess typecast it to a certain thing. I try and think of like the actors that get so upset that, like Jim Carrey for years, he couldn't get serious roles because he'd been typecasted as the comedian, right? And so I think that most people typecast cash flow investing with real estate. And I think real estate's a great component of it. It's a great way to do it. It's one of many. I've done cash flow with operating companies, with franchises, with senior secured debt, with other private credit opportunities in cannabis, music royalties, all different types of royalties, by the way, revenue shares, profit shares. I mean, you name it. I've probably researched it and likely have something in my portfolio that that encompasses whatever it might be. And for me, it's just, how do you buy assets that produce income, that produce enough income to cover your lifestyle, or at first your cost of living? So maybe it's not your lifestyle, but maybe it's just enough to live a good life. And then eventually you can work up to your lifestyle. And there are many assets that it can be. It does not have to be just a single one. And in fact, I think it makes sense over time to diversify into different things so you're not over concentrated. One thing that banks look at is concentration risk. Do you have too much of your assets in, or too much capital, or too much of your portfolio in one specific asset class, or one specific asset, And so I think that in our own portfolios, we should look at that. But yeah, when I look at cash flow, I look at how do I get utility today? If you're in the stock market, most people aren't taking those dollars today. That's for whenever people retire. And hopefully the market doesn't dip. Hopefully we don't have a recession leading up to it, because that money, it's hard to make that money back in 10, 20, 30 years when you have a big drawdown. And then a lot of people have, equity type investments that are paper money, like venture or early stage, angel investing, or, even late stage that doesn't, exit for a while, or something happens. It looks like there's a lot of money, but you don't get utility out of it. I want to own assets that have utility today, that I can use it today. My family benefits today. And then part of my way of de-risking that deal is making sure it cash flows right away, so I'm not banking on appreciation. If something cash flows and there's a recession or whatever might happen, there's another COVID, there's whatever it is, then I'm not forced to sell, because I can cover the debt service, or I can cover, I've got enough to keep it afloat, so I never have to take a bad price. And then I like that return of principal quickly, because that also de-risks the deal, and it gives me some velocity of money. The quicker I can get my money back, the more I can put it to work in another deal. And so, I talk about in getting this principal back quickly, how it can compound over 3, 4, 5 years, where let's say I do a 1-year note, but I negotiate an equity kicker, which is just free equity. Basically, I'm getting I'm getting some sort of interest on my money, but because I was able to negotiate it, I get some equity for free. So I get a balloon of my payment back at 1 year. I get, payments every month or every quarter inside that year, get all my money back, but then I still have equity, even though my money's back. And then I can take that and invest in another deal for a year. And maybe this is an operating company where I set up an accelerated distribution schedule with partners that run it and say, hey, I'll be the money in, but I want all money out until my initial investment's paid back. And I've had several businesses that have totally paid me back inside of 6 months to a year.
Wow.
Some longer, some even shorter. I've one that paid me back in 4 months. So that's just another example of having all my money out of a deal again, but then still having equity in that deal, and I can repurpose the same dollars. And I've done many syndications, and where I invest as an LP. I actually don't raise money. I've never actually done my own syndication. I've always put my own money in my own deeded real estate. But I often will invest in other people's syndications if they've got a great track record. So, I have this really fun example where over 5 years, I took the same $100,000, put it into 5 different deals. I got paid cash flow each year in a different deal until I got that money back. But then I had equity after it. And so my goal is to replicate what the banks do. The banks use fractional reserve lending, right? Well, how do I do that in an even less risky way? How do I do that in a way where my assets can grow even faster and compound more because I have upside, but I have no downside risk? The moment I have all my money out of the deal, I got no risk. I've eliminated it all, but I still have upside opportunity if something goes really well with that investment.
Man, I think there's so much there, and I love it. I think it's going to be a lot of ahas. I think it's going to be music to people's ears because you're talking about the concept of recycling dollars. Again, killing the limiting belief that you need this huge egg of money in order to create this huge cash flow. You're using the same recycled money. And I also really love the concept. I think people think of investing as one big thing. And what you're talking about is, hey, if your equity's over here, you're not touching that. You break it down so simply. I want money that I can use today for my family to do things. I think that's huge. And I think it's just breaking that down for people. I want to get in. You touched on a couple examples, Justin. I'd love to hear you share. Let's go through one. As open as you want to be. How did this work for you recently, or maybe a project that comes to your head where you're doing exactly this practice? You're getting immediate cash flow on something. You're getting your return back. Dive into one for us a little bit if you would.
Is there a certain niche that you're interested in? Because I've got, probably 300 or so active deals right now. So I could probably go in any direction. So I don't know if you're wanting to go down a path of like what's easiest for your audience or something different that they haven't heard of.
I think a lot of people are familiar with the BRRRR strategy and applied to real estate, but I'd really be curious to hear an example of how you've done this with like a small business. Okay. And how you've kind of negotiated, how you set up those terms in order to get that small business launched with your capital or your investment, get your money back, and then how much the cash flow is in your equity position and things like that.
Sure. Yeah. So I'll share a business that we recently sold. So we bought a dog training company, and that might sound weird because anyone who knows me, they know that I don't have a dog. I've never owned a dog. I don't know the first thing about dogs. I really don't.
Do you like dogs, Justin?
I like other people's dogs.
Okay,
I don't want the responsibility of having a dog. Like I feel like it limits my ability to go do stuff, and by the way, that may just be a false belief. My daughter would love for us to get a dog. She loves pets, period, but dogs more than anyone I know. So we've got, it's funny, we actually have a bunch of cats that are neighborhood cats. So she's getting some of her goal without us actually having to have pets. But
this is smart. Yes.
Yeah. Great way to do it for us. My wife's kind of on the same page as me. But I just noticed this trend during COVID that my neighbors were all buying dogs. And I had friends that are like, I'll never buy a dog. And they did. And I had other friends that are like, I'll never buy another dog. And they did. And so I just saw all these people buying dogs. And then my friends were like going crazy about, dogs going to the bathroom and tearing stuff up. And I was like, man, a dog training company seems like a great idea. So found a dog training company in Kansas City, a company called KC Dogs. And we ended up basically, so I had a friend that I'd worked with in a previous business that was working in corporate America. One of my goals is not only to, have good investments and help people have financial freedom, but how can I help people even with the first step of their journey, which is, for many people, it's get out of corporate America or get out of the rat race, kind of get into the entrepreneurial space. For the record, I don't think you need to do that to be happy, to find financial freedom. But I think in this instance, and in a lot of instances, that's a great way to go. And so my friend was making $65,000 a year at his corporate job, but the business that we bought, the owner was paying himself $75,000 a year. So it was like, hey, why don't we just have you run this business? You get a $10,000 pay raise. I'll give you a whole bunch of equity, way more than I need to, because my goal is to help you, really find financial freedom, or at least get out of the rat race, at least the start, of being an entrepreneur and moving in a more positive direction, because I knew this is what he wanted. And so, and for me, what's an extra 5, 10, 15, 20%? It's irrelevant to me and in my life, but it's very relevant to someone else, right?
Yes. Yeah.
So he had total skin in the game. He put his life savings or close to his life savings into the deal, which wasn't a ton, but I needed him to have skin in the game too. And then I was the rest of the money. And so I came in with the down payment. We got lending secured through one of my relationships, but I made him do it. I made him get it. He had to sell it. He had to go through it all, but he used many of my contacts. Cool. And on that one, I was able to negotiate myself off of the personal guarantee or down to 20% right out of the gates. So most of the banks wanted me to be 100% personal guarantee. It's great to know for anyone who's looking into, even with your home mortgage, everything is negotiable. Banks, people look at banks like there's no negotiating with them and they just sign the docs. I negotiate everything. I negotiated my home mortgage down. I negotiated some different rates. I negotiated a unique structure on our home that locked in, a 30-year rate, but gave us 10 years of interest only, so that I could take the extra overage and invest it at a much higher clip than, being locked in on a mortgage. And so I do this with all the banks. So I negotiated, for this acquisition, this dog training company, down to a 20% personal guarantee. And then what I did was I structured the agreement. So I actually gave him the majority of equity in this company, which I have a lot of friends that think that's crazy, but you know what? I think it was incredibly motivating for him, and just he saw this as his opportunity to make it big. But for the distribution, I said, hey, I'm putting 100K down. I'd like to get that back quickly. And so in this instance, I got paid, I think we either did 80 or 90% accelerated distribution. So even though I'm the minority equity holder, I got paid, I think it was 80% of the distributions until I was paid back in full. I think did another deal with him where I got paid 90% until I was paid back in full. But in this deal, this is a super cash flow heavy business. We just optimized some of the SEO. This thing was, we got this thing, believe it or not, we cranked this thing out to profit. This was profiting 10 to 12,000 a day until we ran out of appointments. So we sold 6 months into the future. And the only way we could have kept up that profit is if we had expanded, got another location, got a bigger location, which we didn't want to do. So we were flush with cash. I got all my money out of the deal in about 4 months. And then And then at a year and a day, and by the way, Patrick Mahomes trained his dog in our studio, which is really
That's
cool.
awesome.
So for any of you Chief fans or Mahomes fans, that was a really cool experience. And what I would say is, at a year and a day, we decided to sell because of long-term capital gains instead of short-term capital gains. We had an interested party. We thought that this would be a good move to take this capital and put it into something else. And so we ended up selling this thing. It was an 11x total. So we made more
Wow.
than the cost of the business in just cash flow, and then we sold it for twice what we bought it for. So it was pretty substantial. We did that all inside of a year and a day. And so, and the interesting thing is, all my friends that are like, you gave too much away. That's crazy. You could have been 80 or 90% of that thing. What they don't know is that my partner came back and said, "Hey, I've got money now. I want to invest in these other businesses, but I don't have the ability to personally guarantee it with the bank. They need someone else." So I got into a position where he said, "You're my first call, and I want to give you equity, and you don't have to put any cash in because we have the cash." So that's where I
Wow.
started doing balance sheet investing. So I just said, "Oh yeah, sure, I'll guarantee this." And by the way, I negotiated my personal guarantee down. So I think I'm still a 20% personal guarantee on this. So I'm limited, but I was able to get 25% of every location that we've done, but I didn't have to put any cash out of my, out of pocket for it. And so that's just another great reminder that, when you're, when you can be generous, not because of what you get, but a lot of cool stuff happens when you're not trying to optimize for the deal and you're trying to optimize for the relationship.
Man, Justin, that's an amazing story and such a cool ties to impact. And what we want to do is, I want to hear more stories. I think when we get back, we're going to maybe toss it back to some of the